Oh, I gotta fix this every single time, dude. What's going on, investors? Just here from Investments, and today is Sunday, March 5th, and what we're going to do is we're going to look at some crypto charts, we're going to look at some stock charts, and we're just going to get an assessment of where we're sitting right now, do a little bit of technical analysis on some of these, show off some of the trades that we're currently in, show off some of the trades that we want to make, and just kind of peruse to see if we can spot anything else we might want to jump into. If you're new here, my name is Dest, and I am on the path to financial independence, and one of the avenues and tools that I'm using to get there is trading. I've had success with it in the past and just want to continue on, but it is not the only avenue I'm pursuing to achieve that. And of course the goal is to just buy back my freedom, buy back my time. So you're with me on the road to that, but this also serves as a trading journal, as I like to try to vocalize some of the ideas and thoughts that I'm having, and it just helps to make them more coherent, right? But if you are in the chat, or if you are watching this after the stream and you're watching the VOD, why don't you go ahead and leave me some of the ones you want to look at, some of the stocks, some of the cryptos. Would love to get them on my radar, because otherwise you tend to look at the same ones over and over, right? So let's get some of those in my peripheral. So Bitcoin, let's do some analysis on Bitcoin. We haven't really looked at this the past week, but we're just kind of riding this supply line that we got going on. Not looking too bad, to be honest. I'm gonna delete this Fibonacci right now, and one of the things I'm saying is this is the important line, right? This orange line that I have highlighted here at 21,370. Discord's opening up. Great. 21,370, and this correlates to this little bit of price action right here, but it also correlates to this price action back in November, plus a couple more areas in the past as well. But this is where your new floor is, and what you're seeing, and we like to see this, is that this low is consecutively getting higher each time. So you got this one here, your second one here, and your third one here, and they're building up, they're staircasing up, which means as this price goes up and comes back, as people are selling it, there's someone here willing to buy it at around this price, and it prevents it from going lower, right? So if it falls below this, there's people waiting to scoop it up. If it falls below this, people are waiting to scoop it up. And what that tends to tell you is that there's positive momentum in the market, right? Like there's strength on the buyer side at that point, because they're propping the price up. So although we had that negative couple days, right? Let's look and actually get a percentage on it. Price range from that peak, I mean, we're down 12%, which sounds pretty drastic. It's not for crypto, but you know, if you had bought in there, you're 12% down immediately, which isn't great. So 12% though, in retrospect, compared to a 54% upside, is not that big, and you will see pullbacks of 12% anytime something runs 54% or more. You know, like when you see something run up that much, it needs to pull back just to build a floor to say like, hey, this is supported, this level is not going to fall, it has some value and weight to it, right? It's very important that you do this, because otherwise when you get price action, and I'll pull up a different chart just to show you real quick, but we'll go back. Otherwise, when you have price action like this, where you're not showing that you're building floors, you go straight up, you come straight back down because you have nothing there to support you on the way down as well. So it's very important that you start to build those patterns in to say, hey, these levels have support. There's an important technicals reasons that these are here, right? So one of the things I just did a Fibonacci from the low to the high, and we're saying that we're already past the 236 on a retrace. So after this uptrend, you're scooping back down. You're actually bouncing off the 382, which means you've potentially already retraced enough to continue higher. A very common retrace, and this is one of the things I taught in watching some of the other live streamers, right? Very common retrace is a 382, the 50%, or the 618. So it's very common that you will pull back or vice versa, run to some of these levels on a retrace. 382 being the first of those levels. So the fact that you already saw it there and it's rejecting that and continuing higher is a great sign. As long as that holds, and that is at 20, I'm around it, 22,000, I would say that's your first line, right? I'll change the color on that real quick. That's your first line before that 21,370. And this would just, a break of this line, like if it broke to the downside, would just indicate like, hey, you definitely want to watch this here because it's getting really close to that 21,300. And a break of that means you might run down to the 50%, which would break that 21,300 level. So that's something you don't want to see. Okay, let's turn this music down a little bit. So that's my analysis for Bitcoin. I think we are continuing to run higher, and I think your next stop is going to be 20, what did I have that there, 28,000 and some change, 29,000, somewhere in that range. I was saying you had multiple touches here at that $29,000 level. So we got that. Let's go through some of these other ones here. ICX, we don't have an active trade out on it yet. That's fine. We were watching, sitting around waiting for this one. Again, you got that nice upslope as you're building and building these lower highs, which is exactly what you want to see. And one of the things that's also really nice about a lot of these is this lull that you're building off of is very critical in the grand scheme of things, right? Like you have this all-time low in December 2019, and this is not even getting to that all-time low, so it's rejecting and building higher. This is a great sign, but a lot of these are making this reversal at critical levels like this. Again, to do a Fibonacci on the downside, you're already at the 382 and you're riding along that trend line, but then on top of that, you're also riding at the 200-day moving average. So staying above that is a great sign. Staying above this trend line is a great sign, and continuing to build higher lows would be a great sign as well. So I would say on this one, you don't want to fall below, what is this, 20 cents? Yep, 20 cents. I'm gonna make an orange line here. I'm not sure what that one is. So that's where you don't want to fall behind. You also don't want to fall behind the 200-day moving average. What I did like about this one is that you had a massive volume spike to bring you up. What I didn't like was that volume was immediately sold off, right? So you had that massive run up, but it immediately sold off, and that's what that giant wick tells you, because the candle started here. So like this daily candle, each candle here is a day. It started down here and it ran all the way up to this price within a day, but then it closed down here. So that means it went all the way up and came all the way back down within a day. So we can zoom in on a higher time scale and it'll show you that. So like, look at that. You had that massive run up, but then it came back down all within a day. What that tells me is there's people ready and willing to sell as this goes higher. So that's not something great, but someone is also accumulating this in this market, as you can see by this stair-stepping higher and higher. Looks pretty good, but have not taken that trade yet. T-Fuel looks like it's actually kind of breaking down, right? One of the things I do like to see about that is it is respecting that orange line that we have at about 50 cents. It actually hasn't even came down to that level, which is this previous close here. If it were to fall below that level, you are no longer making lower or higher lows, you are making lower lows. So you are no longer going in the right direction. This is no longer valid at all. And we drew this orange line off of this, but it also correlated to this moment as it was being tested as resistance. So support here, resistance here, support, and then you had a couple more plays. We were saying this has some great potential to potentially run for 150-160% gain if we were just doing it off the Fibonacci. So we did a fib from the high here to the low here, and it was validated because this wild wick hit that 236, right? That point 236, which makes it a valid fib. And we were saying from there you could easily see a fib retrace to the 382, the 50% or the 618 level. Will it happen? I don't know. It seems like we need to kind of recalibrate at this point, but these are all going to depend on what Bitcoin does. So it's going to be very critical that we watch to see, is this actually putting in a higher low, or is it going to continue to break down? Personally, I'm of the opinion that it's going to start building and cascading up. Your RSI is telling you that you are reset. You're at 42 of your RSI, so you are reset and ready to go. I think the spring has been coiled and you're just ready to pump up. So that's it for T-Fuel. I'm not going to look at all these. I'm just going to kind of blow through some of these today. I started my stream a little late, to be honest, but that's okay. Again, you have the line that we drew as important, and this is almost the same chart as T-Fuel, right? Like you got this test here and this test back here, this test here mixed with this test here in October. You are not above the 200-day moving average anymore. You fell below it, which is a negative sign. You fell below this supply line, which is a negative sign, but you are respecting this level at 80 or 98 cents, which is absolutely critical that you do. I'm going to redraw that to 86.5 just to really touch in on that. Very critical that you stay above that line. If not, your next line of resistance is really nothing till 80 cents. So if you break below that, you could potentially see 80 cents. Theta is one of my long-term holdings, which is why I monitor it every single time. Just you got different buckets of trades that I'm in, right? Like, so I have my fundamental trades where it's like I have my fundamental analysis, I got my technical analysis trades, and I also have like long-term growth investments that you also, those are more like, what companies do you think in the next 10 years are going to be valuable and grow? Like, do you think Amazon will be here in the next 10 years? Do you think it will be more prevalent or a worse company at that point? Personally, I think Amazon's going to do great over the next 10 years. So it's one of those things that you're willing to put into your bucket and just say, hey, I'm not looking to trade this right now. I just think in the future, this is going to be worthwhile to hold. So we were seeing potential broadening wedge. I don't know how valid that is, but we were also saying that we would like to see a formation like this upon that, where you are respecting that you're going to build a higher low here. You're going to turn around and break out of that wedge with potentially a back test. And the way a broadening wedge works is your measured move is going to take you to the top of the formation, which correlates to this level. Yeah, you can't really draw it here. I wish you could, because that would take you even higher. But it would take you to here, which gives you a 68% gain if that's possible. And realistically, what I would do is, depending on when you caught it, where'd my, let's redraw this real quick. Long position. Let's say you caught that breakout. You'd put your stop loss inside of there, so that if you started to go back into that formation, that is when your trade would stop you out. And I would also front run this, maybe sell it at 60%, just because there might be a wick that touches that level and you might not be able to get your order filled, so you want to front run that. Just make sure you're the one that capitalizes off of that, right? So yeah, that's a great risk reward potential. Looks like a good trade, but you need to see it continue on that path first, and you're not putting that trade in until you break out of that wedge. But it's good to view these and analyze them for like, hey, this is starting to build this type of formation. It's not there yet, but if it does, that is where you would want to take a trade. So that's why you look at these every once in a while. We're doing every Sunday, Tuesday, and Thursday just to assess these. Stocks are very slow, so that works for them. Cryptos, I do look sometimes in the off days, but I don't do as in-depth technical analysis. You wait for the formations to build up on these longer time frames, because the longer time frames have more weight than the lesser time frames. Mo's is a trade that we were in, and this one was a mixture of the there was a little bit of technical analysis that went into a fundamental decision. This fundamental decision came from the Ukraine war. This is a fertilizer company, and fertilizer mostly is produced by Russia. So I made this trade in anticipation of that, right? And then I also correlated to a breakout of this important level here at $44, which correlates back to May 2015. You could even go December 2013. You got a touch here in May 2012. It's just, I mean, there's other important levels, like you could have drawn it down here, but that's where I saw this previous top, and you broke above that previous top, so that's where I tried to get in. You had a massive pullback off of that, but now since then you've broken out of that demand line, and you're just kind of doing a little back test, continue on higher, and you're above the 200-day moving average. You got some nice green candles showing up there, and you're just continuing on higher. It looks really good. PEMIF, just absolute trash right now, and I don't know what to say. This is one that I really sometimes you really want it to play out more than it wants to play out, right? You're bouncing, pivoting off an important level here. As you can see, it correlates back to December 2018, but you're talking about really low levels, and it almost looks like it already wants to roll back over. I had a fib from the swing high to the swing low, and we were saying that it's already respected the 236. Could potentially see a 42, 69, 95% gain. I'm not as confident in this one as I would be with other ones. I think this one, sometimes your emotion gets to you on some of these trades, right? And I don't know that I'd personally put my money up if I was an outsider. I've been in that one for a while, since I was like 20 something, in my 20s. T-Mobile, I'm not even gonna look at. Does look like it's double topping though. Does not look promising at all. If you're in it, I would consider getting out of it. I am in it, and I'm considering getting out of it. So just looking like it's starting to roll over. Don't like that. XRP still in the channel that you've been in for a very long time, and I don't think you're gonna get out anytime soon. I'm not even gonna look at it. XRP doesn't do shit anymore. Ever since it was on CNBC and people bought it, it just has become a fucking terrible coin. EOSE. Now this is an interesting coin, or I'm sorry, this is actually a stock. Reason I initially started watching this one was because I saw it on the Whale Watchers, and they were saying that there was insider buying happening around this level right here. And I'll zoom in a minute so we can see, but we're seeing insider buying come in, and then they got a bunch of contracts happen. And you had this long drawn out downtrend. You got an ABC correction on the long term, and then I'm going to delete these fibs here. You got this what did you call that, supply line, where it's just continuing downward, but then you eventually break out of there and you get a back test of that level, which is a great sign to see. And then since that breakout, you've back tested the 200-day moving average as well. So you got a couple important levels that you're testing here for this. Now, one of the cool things is, since it is so low, there's not a lot of resistance for it to go to the upside. So your last real price action was at $10.03, where you hit this as support, and then you hit it as support again here, and and then you fell down below that, right, while you were on your downtrend. So good to see it turn around, and there's a lot of upside potential on this if it does continue higher. So that's really nice to see. Yes, I did. I made my trade on this last week at some point. I think it was this breakout here when it broke above this previous high is when I bought in. It has since come back to test that, and I think I'm about where I started on that. I caught it a little later than you'd want. You'd wanted to really break, or you really wanted to catch it on this breakout here, or at least the back test. I just kind of wasn't paying attention to this one. Not close enough, at least. Again, sometimes things get outside your peripheral vision, and it's hard to keep an eye on everything all at once, right? Another one that we're in is PAA, and we had this nice wedge formation after a really long drawdown. Oh, this one actually, I'm gonna zoom out even farther. So you had a nice 1, 2, 3, 4, 5 wave up, and then a nice ABC big correction, right? This is a big macro scale, ABC and 1, 2, 3. But then at the end of this, you had that really drastic downtrend, right? And then you had this nice wedge formation forming up, pretty much correlating to this low of October of 99, which is probably before a lot of the people watching this were born. October of 99, but it's an important reversal time frame, right? So like this level at $4.79 correlating to that level in 1999 tells you that that is an important level to start you off going higher, right? And you hit it again, and since then it started to go higher, and that's what you want to see. So since the price is going higher, you've had a little bit of price consolidation, and it's broken out above that now, and you're starting to run. And the way we did our measured moves is we did 2 different sets of measured moves. The first one is this formation measured move, and what you would do is you would do the high to the low here. You'd copy that and put it on the breakout. So you'd copy and paste it, which puts you at about a 48% gain here. That is a great measured move. And then if you were to make your stop loss, you could easily put it within this formation. So like a breakout of that formation, and then your stop loss in that formation. So if it continues higher, you're good. If it falls back into that formation, you get stopped out. Was a great trade so far, as long as everything continues onward. But then our second targets, we did a Fibonacci from that high here in December 16th to the low here in March 2020. And a very common retrace is the 382, the 50%, and the 618. So we were saying that you could potentially have up to almost a 70% run to get to that 618. But realistically, the real play here is an overall reversal, right? This is like a swing trade type play where it's like, okay, this level hasn't been seen since 1999. If it starts to turn around, there's no reason why it can't continue to run higher, and you eventually in the long term, I'm not saying like within the next year or a month, run for these all-time highs. And that would be an insane amount of gain. I'm not saying this would ever happen, but just for example, like to the all-time high, you're looking at almost 400% gain, which is outrageous. So a lot of these critical levels, like if you are catching these as a swing trade and buying these, you know, with that anticipation, like, hey, I'm going to sit in these for a long time, especially the stocks, right? I'm going to sit in these in a long time and just kind of buy low to sell high. It's a fantastic mentality to have, and potentially could pay off in the long run. Now let's zoom in on 0x to see what it is doing, and I'm already getting tired, so I'm gonna call it probably after these couple ones here. Fell below our demand line here. Important line at 22-ish cents, because you don't want to make a lower low. You're still continuing to make higher lows, which is good, but you obviously just don't want to see that continue. Like you don't want to draw down any more than what you got. You are respecting the 200-day moving average, so I'd say you're still okay. You got a lot of green buy volume coming in, another great sign. You're still outside of this nice wedge formation, this descending wedge, so you're not looking terrible, but you're not looking as good as you were before that drawdown. Again, everyone's waiting on Bitcoin to play out. Your RSI reset on this to 45. You're looking good on that. Your spring is coiled again. You got actually a bearish divergence showing up here, where haven't talked about divergence much on this. This low here correlates to this low here. This low here is in the same time frame as this low. This low is lower than this low, right? But for some reason, this is where the divergence is: lower, higher, higher, lower. So you're getting divergence there. I mean, that's a bullish divergence, not a bearish, sorry. So that's a good sign that you could potentially see a turnaround on 0x, ZRX, whatever the hell it is, who cares. So not looking terrible. You just need Bitcoin to continue on. Shiba, on the other hand, really shit the bed. Does not look as great as ZRX. You are still respecting the 200-day moving average. I'd say your final line in the sand is this level at 1103. After that, you got nothing until 952. And realistically, on the longer time frame, as long as you make a higher low than this one, you're okay. It's just your trade has that potential to go all the way down to here and then come back up. So it's not going to look not gonna look as pretty as people want it. So I don't know that that's something you want to sit in. Just not looking great. Intel was one that we are looking at because we want to get a fundamental play on this American investment in chip manufacturing, right? But then it was also correlating to these multiple touches at this important level of 25 and some change, right? And you had price action dating back. I mean, I've circled each one of these touches. You got price action dating back to August of 97, where it was resistance and then support in June of 1999. So there's a lot of important price action that happens at this level, and you are starting to reverse at that level. You hit it a couple times. You have a M shape actually. Could see this being a reversal. I'm not gonna get into this. All right, we're gonna keep our eye on this. We'll look at this on Tuesday again when we do our next analysis here. QNT, you're building up, continuing with your trend line. That's okay. Did start to roll over. You did make a lower high than, or a lower low than previous, but your macro is looking okay. You did fall below the 200-day moving average, which isn't great. You're starting to make lower highs, which is not great as well. Potential head and shoulders with a little... No, I would say it's invalidated because this ran beyond that. Not looking fantastic, not looking too terrible either. Nokia we were looking at for inverse, potential inverse head and shoulders. Waiting to see it get to the neckline before you make a trade. If so, you potentially see a 66% gain. And same thing with G, except for it's already broken above that. And you are on pace for a 57% gain. But again, the real play here is not that trade. You're looking at the swing trade. You want to see it continue on past that, right? Like this might be an indicator that we are going higher, and this is reversing at this level to continue to start building, and the positive momentum will continue into a formation something like this, where you just kind of build over time upwards and to the right. That's what you want to see. I'm going to do one more unless anyone has a request, which I don't think will happen, but hey, if you're watching this after the fact, that after the video goes live, feel free to leave it in the comments, or let me know if I did a good job. Let me know you're alive. Let me know anything. I'd appreciate it if you would. Would love to get some sort of feedback from anyone. That'd be great. Let me know, especially if you get some sort of value out of the stream, or if you have questions. I would love to have questions so I can start to give people lessons, right? I think if I were to give some sort of lessons, especially to beginners, more and more people might find more and more value out of this. So your important line on Ethereum is 1564. Reason being is that's the all-time high here back in January of 2019. But then it also correlates to this line in February of 21 where you tested it as support. Came down as support here, but then oh no, then support again. So I'm looking on the weekly, that's why it's all scuffed. Anyways, that's your important line, right? I don't need to go into that anymore. Support, right? Resistance. But you're kind of stuck in this wedge here. What the frick just happened here? You're stuck in this wedge. Good thing about this wedge is that, I'm calling it a wedge. This is a parallel channel you're stuck in. And good thing about this parallel channel is it's upsloping. So as long as you stay within this parallel channel, you're still building higher, right? Obviously you want to see it break out to the upside, But the good thing is that you're putting in higher lows, you're continuously building higher highs, which again is the great sign, but you're at the bottom of it, right? So as long as you're respecting this, which it seems like you are, you got upside potential within this channel too. Like even if you were to do something like this, let's see what kind of measurement you could get from right now to the top of this. You're talking about a 15% gain, right? Shit. Okay. Still above the 200-day moving average. Still above important levels at 1405. I would say you don't want to build a lower low than 1521, but your real one that you don't want to build a lower low below is this one, correlating to February of this year at 1470. Anything below that, you're falling. But that's all I've got today. Man, it looks like shit. Man, it looks like it's falling apart. Some of these are just looking like they're falling apart. Good. Like I said, if you got any sort of value out of this, feel free to leave a comment, leave a like. Don't forget to subscribe, all that jazz. Till next time, see you on Tuesday.